Welcome to TradeTheMBA.com. This is John's report is for the 20th of July. And the juggernaut continues, albeit slowing down just a little bit. We even have some pre-market warning signs here as we're starting to get the spike up of the cyan on the DOC and a complete fade off of short-term buyers. It's not that relevant. I mean, we still have plenty of fillback spaces that would really not impact much of what we've seen from the move. While this has been a surprise to a bunch, as it comes in with mediocre economic ratings, that to the market seems like a great scenario of, well, there's going to be easy. They never take into account the fact that that can snowball into recessionary situation, which will certainly accelerate a decline, and then you never know how steep that gets. So that can become an extreme negative outside of just the Fed easing, because this idea that the Fed will ease will make everything better just never worked out. It's a fallacy of thinking. I mean, you can throw enough money at things that it hides things, but again, it only does it for a certain amount of time. The inflation move, though, was fantastic, and it worked beautifully to really suck up a lot of that liquidity, at least from the lower end of the scale. The upper end of the scale, probably not moving resources as much, so it's not as noticeable. From an NQ standpoint, you can see I already have the crossover developing, and it's not shocking. There's been quite a move, and some level of fillback is normal. Oftentimes that 76% becomes the draw, and usually what you do is you get a catch up, a slowdown acceleration going across, and then it's able to fill back in and meet that. Certainly be watching for cyan moves on the daily, at least over the zero, as even though the red DOC is still strong, crossover of green below it, there's a little important areas because they represent a significant change in the structure of who's in charge of things. Still not seeing any real short activity involved in it. It's just profit taking and just some weak buyings. And of course, Treasury market out of control here. This belief that the Fed is going to reverse course in quite dramatic fashion, given the decline in rate here, and this increase is unusual. I mean, it's not too different than what happened here, and then the Fed reiterated that it was doing exactly what it had been doing, and sure enough, they were on the wrong side of it. But it is an indication that perhaps more and more people want to park money into safety, or at least the idea of safety. From a euro standpoint, also, this idea that the U.S. is going to suffer some kind of, decline, causing, and what's even weird about that is to think that Europe would be insulated from anything that takes place in the U.S. That's cute. Some of the logic in some of these things doesn't add up, and so that's where you have to understand there's exuberance, there's narratives, and it's just about pushing people in a direction and then trading counter to it. From an oil standpoint, that becomes problematic the longer this stays in the elevated side of the range, particularly if it breaks now to this upper side towards the 80s. That could change things dramatically, and really the Fed would be hamstrung at that point because it wouldn't be able to go with a change in direction. It would actually have to accelerate the rate increases. And so from a gold standpoint, we started to see that steady upflow, and we knew that that would be correlated to what we saw in oil, and that was the expectation there. So it's pretty consistent within that range. Bitcoin, not a whole lot of anything here. It was just a matter of filling back some of that positive extreme off of the news, and that it's probably just going to be soft and easy here for now, and then it'll have its next run. It's still in pretty decent condition from an ETH standpoint. When you look at the MBI readings, that it's not going to take much for a buy crossover. You've had a pretty good run with gold rising that. What we do know, though, is when we get that spike of white and we start to get the turnover on that, usually there's a significant pullback within those. So it's worth noting. From a 50K, posted with a beautiful run-up move. It got out of it, yes, still popped up a tiny fraction, but out at just the right time, and then it wanted to short the break of that 76, which caused it to pop, but has broken back down below it. Still has potential for holding on, and once you get up into this range, where the 45 to 89 range, expecting the 46, absolutely, but usually you expect somewhere around the 46.22 range is usually what they do, and sometimes it accelerates to the 38. Depends on how much liquidity and excess you got going on in there. But without a lot of shorts, it makes it really tough to get there. When we look at it from the intraday pre-market, there's the 5K. Huge bounce up leading into the open, and then boom, we just started filling it all back in place. And even by the end of the day, the last rally wasn't able to get up towards the top again, and that caused a fade off into the close. And that's gone back and forth here in the pre-market action. Got to go over far enough there to kind of get the idea of the time. So from end of day there, we really haven't broken past that peak area, and that's creating just some modest minus what 8. It's hardly anything to talk about, but at the most part, things are trading beautifully within range. I think that that's the optimal choice at this particular stage, and it's just a matter of waiting for some significant event of data that will indicate that there's a problem that hasn't been foreseen. Because as of now, everything's pretty well known, and things are still moving along rather calmly. So that's the long and the short of it for now. As always, I'll update you on the Skype chat. Trade well.